Hey guys, Alchemist here. So I thought I'd jump on and give you a quick recap as to how the FTMO challenge is going. I took 2 trades this past week, which were both valid losses, and I'll show you on the charts exactly the thought process behind them and how they turned out. And I will also show you as to how the FTMO challenge is going. So currently I'm still up about 2%, and I've got about 6 trading days to go. So there is a long way to go to make that 8% in those 6 days. However, hopefully the market will be a little bit better this coming week. If you do trade AUD USD or if you're following the market, we've not had very nice price action for the past couple of weeks. It hasn't been terrible. There have been a couple of setups. The ones that worked out well were the ones I didn't execute, so I'll show you a couple of those as well. But moving forward, what I'm going to do is, as I'm still in profit, if I find that I'm not going to be able to reach that 10% goal by the end of the challenge, I'll just make sure that the challenge runs out in profit so that FTMO will give us a free repeat, and hopefully I'll have some better price action to trade in the second attempt of the challenge. So being completely transparent, it has been a little bit difficult these past couple of weeks. Market hasn't been providing the best setups, and I have had a couple of health niggles come up through the gym. If you've seen a few of the shorts of my hack squats, I have been hack squatting quite a heavy load previously, and I've actually done something to my neck where it inserts into C5 of my spine. So it has been a little bit painful. I've been taking a lot of Panadol, but we are recovering well now, going to the physio and everything else to make sure that the body is taken care of. But we'll jump onto the charts, I'll show you those trades, and I'll show you the FTMO, and we'll go from there. So starting off by looking at FTMO, we can see here it will end on the 21st of March, which is the coming Tuesday. So I do still have 6 trading days to go to complete the challenge. And currently we've only taken trades on 6 days, and one of those was just a small lot one, just to make sure that I actually make the 10 trading days, which is the minimum to be able to pass the challenge. And here you see those 2 valid losses, which we're about to go through and have a look at. So just to be fully transparent, these are all the trades that I've taken. And I will say I'm quite happy with the slippage and everything here. So you can see I mostly use a 2.5 pip stop loss. This here was executed at 2.6 pips. This one I did actually use just a 2 pip stop loss, and it closed at exactly 2 pips, which is really good. There has been one trade which has given me a bit of slippage. I believe it was this one here. I actually did have 2.5 pips and it stopped me out at then, which was a little bit frustrating. But then the following trade, which was the confirmation and which was the other video, which you haven't seen, I'll put a link up in the corner to go and watch that now. So that did end up running really well. I believe that was after partials and everything, it was about 7.63%. So that was really good. Sorry, 7.63R, and I used 0.5% per trade. But we will be reviewing these 2 trades in today's video, and I'll show you the 2 valid losses that I took. So again, the aim here, what I'm going to do is I'm still going to treat the challenge as per normal. I've still got 6 days to go to make that 8%. So moving forward, that's what I will be doing. If I am able to complete it, great. If not, no stress at all. We do get a free repeat as long as I do finish in profit. So we'll go on to the charts now and have a look as to how those trades went. And if you do have any questions about the FTMO or about the breakdowns, please leave them in the comments below. So as always, we're going to be starting off with a blank weekly chart. And if you have been seeing my previous videos, you'll see that this here was the weekly supply that we tapped into here, which has caused this bearish reaction. And in terms of our weekly demand, we had this here as this POI. Now, this candle now has closed below it, but at the time it hadn't yet. So this was still the demand that was holding, because for this demand to fail, we'd want to see this body close below, which now has occurred, but at the time hadn't yet. So that's all that we need to do on the weekly time frame, and then we'll go down to the daily. And on the daily, you should know by now that we're looking for a break after a pullback of at least 110 pips. So this here was our daily boss. And then as you can see, this pullback here was only 88.5. So it hasn't yet completed a pullback greater than 110 pips. So we haven't yet set our daily low. So we have this as our daily boss. We have the highest point above as our daily high, and we're actually yet to set our daily low. So that's all that we need to do on the daily. And now on the 4 hour, we had this here as the previous 4 hour boss, okay, when it was greater than 90 pips. And then as we see, as we come below here, we had this pullback of 88.5. Now 88.5 is obviously less than 90. However, in this one particular case, what I have said to the members is we are going to be taking this one here to be our 4 hour boss. So although this was less than 90, in this particular case, we are going to be taking it as the 4 hour boss. And what I'm going to be doing moving forward is analyzing the market to see if this 90 pip number needs to be amended, because I have mentioned that in different market conditions, we may need to start amending these values if the market does change how it's pushing. And right now with this high momentum, it's very unlikely that price was to retrace all the way back up here for where the 4-hour premium would have been. So we have taken this to be our 4-hour breakup structure. So this being our 4-hour boss, the highest point above is going to be our 4-hour high. And again, we are still looking for that 90 pip pullback to confirm our 4-hour low, which hasn't yet occurred. So we've broken below here on the 4-hour. We've had a very small pullback of only 60 pips. So again, that's a lot less than 88.5. So I understand that there is a little bit of discretion there, but that won't be discretionary after I do further analysis. So essentially, if we see a few more 4-hour breaks of structure being less than 90, but very, very close to that 90 pip figure, I will analyze the market to see if that needs to be amended to potentially be 85 or 87 or whatever it might be. But for now, we're sticking with 90, just with the exception of this one here. So looking at this 4-hour range, we have started a supply chain from the top here, which has then led to this one. And then here we have this, and I will be taking the upper wick as well. And so we can see we're chaining in terms of supply from here to here, down to here, down to here. And then we're not too sure where the next point is going to be. Looking at this, there's not very many nice POIs. We do have these buy to sell wicks, which essentially is going to be the first supply in premium if this low is to become the 4-hour low. So right now we don't have a 4-hour low because it hasn't yet had a pullback greater than 90 pips. But if price was to pull back an additional 30 up here to set a 90 pip pullback, then we can see that this here is going to be the first point of interest within this 4-hour range, which is going to be within premium. Whether price will make it up to this point is yet to be seen. So we're just going to have to wait to see what the market provides. But that's the thought process so far. We're extremely bearish on the 4-hour as well as the daily. We haven't yet fulfilled a bullish pullback into premium, which we would still like to see, but it doesn't have to happen. And then we'll go down to the 15-minute to analyze. Looking at this here as well, if I drop a horizontal line, we can see we've interacted with these buy to sell wicks as a 4-hour demand in the past here. So we've got this POI, which has interaction to the left, and we can just mitigate it. Sorry, we'll leave it as it is here. We can see that's what price has tapped into to provide this small pullback. So this is a 4-hour demand, which has given us this push up. Hasn't reached these very minor buy to sell wicks or this week or these buy to sell wicks, which would be within premium. And whether or not this is going to hold, we'll have to see in this coming week. Ideally, we would like to see price potentially sweep this, pull back up into premium, and then to turn bearish to continue its descent down. But again, price does not have to go back up to premium. It's obviously preferable if it does, as it'll allow us to take shorts in a more well-priced zone. But again, it doesn't have to. So if we do just continue lower, it will be a little bit disappointing because we wouldn't have set a 4-hour low. So we're going to, again, have a very large 4-hour range, which is just what happens when we have high momentum in the market with all the news releases and everything that have been coming up in the past couple of weeks. So that's the idea for the 4-hour. I'm going to remove this and we can leave that one there. And we'll jump down to the 15-minute. So on the 15M, pushing all the way down here, we had a pullback from these two candles, which was greater than 22, so it was 27.5. That became the low. And then here we had a pullback of exactly 22 pips. So we can see that that 22 pip number for the 15-minute is still working very nicely. So at the time, this would have been a 15-minute boss. I'll just mark everything up for you, meaning that the highest point above there is going to be our 15-minute high. And if we push that to the right, what we see here is that we have the first gold candle closing above, and then the next bearish candle does have its body close above the high. So this actually became our new 15-minute breakup structure. So we can remove this one. And then we can identify the lowest point below this 15-minute breakup structure line as our 15-minute low. Again, if you are new to this channel and you haven't seen my 15-minute market structure mapping video, I will post a link to it in the top right-hand corner now. So there's a 15-minute low. And then once this high gave us a bearish pullback greater than 22 pips, we have solidified our 15-minute high. So in this case, we can drop our premium and discount. Okay. And what we can see here is we have this unmitigated demand on top of this wick to the bottom of this wick, which does have inducement above it. Liquidity to be swept. But we also had this as a demand, which price came into and swept. So we didn't have a body close below this, so it's not yet a demand failure. We had this as a liquidity sweep, and this demand has interacted with this as a supply. After this supply set a lower low. So this was the demand, Sorry, that was the supply. This was the demand that flipped that supply. Price has been bullish, created a new 15-minute breakup structure, has retraced into into discount, which is where we like to take longs. And then through the use of this inside bar, we've actually had a 15-minute bullish change of character, which is very nice to see, because now essentially what we can see is price has fulfilled a new 15-minute breakup structure, returned to discount, which is a great place to be taking longs. And then our order flow has aligned with our structure, meaning our order flow is also bullish and our structure is bullish. And this here can be seen as a targeted high, as it failed in its objective to set a new low. Therefore, we can be looking to take longs after we've now built this demand chain, which I'll draw out for you as well. And we had this, which has interacted with the inside bar as the supply. And we had this. So the first long that I took was within here, and we'll go down to the 1 minute and have a look at it. But the idea here was that this demand chain should be holding as structure is bullish and order flow is bullish to potentially at least this supply zone, which we could see a potential reaction from. But the idea is that we should still be taking out the 15-minute high. When we pair this with our 4-hour, seeing that the 4-hour has yet to confirm its 90 pip pullback back up into this supply, which is that 4-hour supply and premium, that was the idea here. So the 15-minute structure is bullish. We're expecting that to remain true. So we are expecting a new 15-minute bullish breakup structure, and we're in discount, and we turn bullish in terms of order flow. So all signs were saying longs, and unfortunately they didn't work out. And this range has continued to consolidate sideways for a long time this whole week. So I'm really hoping this next week we see a break of this range, potentially either up to this 4-hour supply or to continue lower and have a new nice 15-minute, new set of 15-minute price action to trade. So that's the idea here. We can see this large wick has swept the liquidity above here. So this supply has now been mitigated. So the next unmitigated supply, even these buy to sell wicks were mitigated with this one here. So we could be targeting this supply, which was very close to being mitigated, but hasn't been. So we can actually see this as inducement as well. So that was the idea for this long. We'll go down to the 1 minute. So after price has now tapped into this demand zone. So we need to still wait for a liquidation model to occur. I'm just going to bring up the entry just so that I'm 100% sure I executed at the right spot. I believe it's going to be this one. Yep. Go back to full screen for you. So price has now come into the 15-minute demand, which we're looking to take a long from. And then we did sweep some liquidity here. All the members of the course, you should know which liquidity model this one is here. And then we've taken some more. And you can see we had quite a nice reaction when that occurred as well. And then our change of character, the last point of supply that set this low is here. So for our chalk up, we'd like to see a body close above this point. Again, we will mark this up as a supply to see if we do get a flip zone off the interaction here. Okay, very nice momentous break, right? So this was a very clear indication to me that we should be expecting higher prices as well. After we've swept the liquidity here, we've pushed up, we've interacted with this. We have this candle here as then a flip after we've interacted with this supply. This is where demand entered and actually caused the change of character bullish. And so my entry was at the top of this POI using 2.5 pips to cover the low. So price does come back and tag us in. And unfortunately took us straight out. So that was the first valid loss that I took on Thursday. This was during the Asian session. So Asian session opens at 11 a.m. Sydney time. So this was 1 hour and 5 minutes into Asian session, which is usually a great time to trade. There's a lot of volatility and a lot of volume at this time. And looking at the overall higher time frame narrative and everything, we can see why I took this trade. The only thing that I wasn't super happy about was that the demand reactions we were getting as we were building this demand chain were quite weak. We weren't seeing momentous pushes up besides this very nice big bullish engulfing. But besides that, we can see that price was quite corrective. And overall, looking at this price action, you can see it's ranging and consolidating. It's not nice when price does this. It's very, very difficult to trade. And when this is the case, the easiest thing to do and the best thing to do, the highest probability trades, are to trade from the edges. So from the extreme supply or from the extreme demand. But given the fact that we had come into discount, we'd given a 15-minute bullish change of character, so our order flow and structure were both aligned. This was a very, very valid trade, and it's just unfortunate that it didn't work out. So that was the first loss here, and we'll have a look at the second loss now. So I've just played price along a little bit. So this here was that first loss that we just took off the demand chain that we were looking at. As we can see, price did just come into a lower demand zone and then go to the supply that we were expecting price to go to. And there was actually a really nice entry within here that I missed. I wasn't at the charts at the time. So the next entry that I took, which was also the loss, was this one here. So we'll mark up some new POIs with this new price action that we have here. So although this was a sweep, at this point here is where the actual supply failed because we had a body close above. So looking at that as a supply fail, we can see this here as the demand zone that caused that supply failure, or a flip zone if you like. And then we also have this one here as a demand zone, which I'll show you the corresponding supply for. So this here was that supply which set this lower low. And once interacting with it here, we push down, we create this hammer, which then breaks above. So this is also a demand zone here. And then this was the supply that we were looking at. So a demand zone's objective is to set a higher high. Ideally, we want to see a body close, but it's not 100% necessary. Although what you can see here is, if we draw this all the way out, we do have this very, very slight close above. So we can see at this point here is where this supply zone failed. Again, we do have it is a demand chain. It's not a very nice demand chain because again, there's no momentum. There's no real conviction of buyer's presence in the market at this point. But given how price had been this past couple of weeks, when we do have an opportunity, we do need to take it. Again, we don't need to see price being formed beautifully because a lot of the times the trades that work out are off poorly formed price action. So we didn't know at the time, obviously, that it was going to be a loss, and it is still valid as per the flowcharts that I've created and everything else. So we were looking to take a long from here into this unmitigated wick of the supply. So we had touched it with this wick here, which I'll show you here. But there is a unmitigated section within it, which I'll show you as well as to where my target was. We go down to the 1 minute. We look into this unmitigated section, the actual 15-minute wick. We had this POI, which was tagged, I believe. And then, of course, we have the extreme. So the extreme was yet to be tagged, and that was the overall target for our trade. Yeah, 7.6 was exactly what it was. And then we had this one here, which had caused that first pullback into this zone. So when we tapped into that 1 minute refined POI within that 15-minute wick of the extreme supply, we came back down to that demand chain. And again, we saw that the demand chain was holding. We hadn't yet set a higher than here, but what we were expecting is that as price returns to our entry, that it would come back to here this week, which I'll show you how I set up the entry as well, to essentially to target that last extreme of the 15-minute high and to potentially break above the 15-minute high. So as we can look here, we can see that our 1 minute change of character occurs here. When we have a bullish close above. And then this here was the 15-minute zone. We can see this wick as a flip. And I was looking to take that as inducement for this zone here, which is where I placed my entry. So I placed my entry at the open of the extreme, and I could cover the low significantly with just a 2-pip stop loss. So that is what I used. And we also had a lot of trendline liquidity building up here. So from a liquidity perspective, this was an amazing setup. We had first this flip, which had swept. Okay. And then we also had the flip itself acting as inducement for the lower zone. So we had fresh liquidity here, and we'd created the liquidity here. So essentially what the idea was is price would come through here, tag into the extreme, sweeping the flip itself for more liquidity to take out the 15-minute high. But again, unfortunately, that's not what occurs. We did have a very nice reaction. So it was the first few minutes, I was expecting this trade to work out quite nicely. We can see we actually swept the extreme just by 0.1 or 0.2 of a pip, which gave us this bullish reaction here. But then essentially it failed and resulted in a stop loss. So they were the two valid trades that I took this week, and they were both losses. And if we do play price along, I'll show you that they actually did end up taking out the 15-minute high. Okay, it did take a while, but essentially that target was fulfilled. Just as the trade that we took down here, the target was fulfilled just by coming down into a lower price zone. So what we can take away from this is, again, as I mentioned earlier, when price is ranging like this, the best thing to do is to trade from the extremes. So if we were to take the long from here, rather than taking it from here, it would have been a nicer trade. But again, we didn't know that this zone wasn't going to hold, and we can't just wait for those perfectly priced zones, because a lot of the times that would mean we miss out on the trade completely. So I'm extremely happy with the fact that I did execute both of these trades. They were both valid. Essentially, both of them required more liquidity before the move was actually initiated. So we can see here we were essentially swept. Then we came back down, and then we took out that 15-minute high. We didn't actually get a body close above. They were all wicks. So we did just sweep the 15-minute high, and price is a bit lower into the 15-minute low at the moment. But this is currently still the 15-minute range that we've had. So it's been a very, very difficult range to trade, even for a professional trader like myself. But we are just going to see that hopefully next week we get some new price action. Essentially, a break below the low would be nice, or if we were to target that 4-hour supply up in premium. So I will keep you updated as to how the next week goes and if I do take any valid trades, and I'll show you the FTMO and everything else so you can see 100% transparency. If it does mean that I do need to retake it, I've got no problems with that at all, and it just means that I'll hopefully get some nicer price action to take with the second attempt. So if you've enjoyed this video, please ask you to leave a comment below, like and subscribe if you haven't already, and let me know what you'd like to see more of on the channel moving forward. If you have any questions about this or about the course or anything else, my DMs are open and you can add me on Discord. The Discord username is below, or you can also book in a free 15-minute consultation for me to give you a quick tour of the community, show you some members' results, as well as the course itself. I hope you guys enjoy the rest of your weekend, and I look forward to speaking to you all next week.